about the scores we ain't set. We said winner 1, 2, 3, 4, 5, F. Fam over gram, that's a message. We be stacking bread up like it's cheddar. Talking about the scores we ain't set. We said winner 1, 2, 3, 4, 5, F. Dreams over schemes, that's a
that score always hits the spot, right?
Bed peddler, baby. You know, there's a one of his lines in there is we be stacking bread up like it's cheddar. And so that's kind of a decent little lead in for something that came up in conversation this week. And I figured we could use it to as our settling scores topic. All right. So I'm on a call with a model match user and loan officer, really smart loan officer using technology in really cool ways. And we were going through some use cases, and, you know, I can't help myself and I like to learn about somebody. So I just said, you know, how'd you get into the business and why this business? Like, why this? There's, you know, if you're a good salesperson, good relationship builder, there's a lot of things you can do. And this person kind of said something along the lines of, I'm just really passionate about the American dream of home ownership. Now, that's not exactly what they said, but that is kind of what they said. And hopefully I don't make any enemies here, because this is a thought exercise. When Abdel and I are talking, it does, you know, Abdel's he's the expert, but like, I'm going to tee it up in a way sometimes that it might actually not be what I actually believe. I'm just using it as a sort of a debate topic. Well, inside when he said that, I kind of laughed, not because I don't agree. You know, part of the American dream is home ownership. I mean, it is. It was for me. You know, it's still something I'm really proud of. On a Friday night or Saturday, I like to go out in my backyard and just sit there. You know, I mean, I feel like this is my little piece of dirt, man. Like, I have a lot of pride around that. There's equity value in it. There's wealth value. Like, I get all of that. However, it made me think, is that really the primary motivator for most originators? This is a commission sales industry. So is real estate. And sometimes when you get into that balance between commission and process or goals or strategy or customer support, well, it can blur things a little bit. So I thought, here's the topic. Is that really the motivator? I don't really think that's the topic though, Abdel. I think the topic is more, what is the motivator, and how can motivators sometimes actually become a problem in the entire process? So, okay, let's start with you, Abdel. You're a smart dude that was going to law school or whatever you were doing because you're smarter than the rest of us. And then you decided you were going to be a mortgage banker. But when you post a lot about this, about how this industry has changed your life. I mean, you're taking care of your mom, you're taking care of your family. Like, it's very personal to you. What's the motivator? Why?
Listen, when we were coming up with this topic and you hit me, and it's funny, I think it's one that certainly evolves as you become more experienced in the industry. Listen, let's be honest. Most of us, right, when we first graduate from college, what's the primary motivating reason why we look for a job? It's for money, right? So that's usually the first key, right? So I think at times in the beginning, right, it is that. But then you may have heard me talk about this before, right? There's always 3 freedoms, in my opinion, that every single person chases, no matter the industry, right? Hear me out. The first one is usually financial freedom, right? Obviously, our goal is to work. Our goal is to make as much money possible. But then I think at a certain point, then it becomes, at what point is it going to also sacrifice time? Because let's be honest, throughout our entire careers, we're always sacrificing our time. So it's time freedom. Now, those of us who are commission-based loan officers, right, we have the freedom to do whatever the heck we want, whenever the heck we want, right? So I can be in another side of the country, or frankly on vacation, and I have the time freedom to book my meetings whenever I want. If you're like us, right, we're never turned off. But you can, to an extent, be like, text the team, hey man, for the next 2 hours, I'm going to be with the kids. I'm leaving my phone at the beach, right, and what have you, right? And I think usually you get to that point after you start realizing that the commission is no longer the motivation. It's spending time with our, family and stuff like that. And then the last one And I think this is the part where we're at in our career, is the relationship free, right? And what does that basically mean is, hey, I want to be able to really invest time, energy, resources, opportunity to my three clients. You've heard me talk about this before, right? My consumers is, of course, on the forefront, right? So I want to be able to educate, inspire, and analyze, right? I want to be able to educate the consumer, put as much information out there in front of them in a somewhat controlled environment, right? So they're not getting false information. And then I want to be able to obviously, truly, right, build that tight niche relationship, right, where I'm not chasing a check, right? Then I'm transactional, right? Then I might be working for another institution that might be paying me a salary with possibly an override or anything of that. And then in the reality of it, right, and Eric, you could attest to this, is then people start looking for shortcuts, right? They start avoiding those difficult conversations. They're like, yo, bro, I'm just a rate interim LO. And for the first 2.5 months of 2026, that was good, right? Rates dipped, all that stuff. But my brother, rates just changed, right? We're now teetering in the opposite direction, not even because of inflation. I didn't see CPI how it came in today, but because of geopolitical activity, right? So my client experience though is, all right, now I got to sit back. Now I got to leverage Mortgage Coach. Now I got to leverage all the different platforms in front of me to educate the consumer, to ensure that they're making the most conscious decision possible in front of them, not just from me telling them, but from me really advising them. And I'll tell you guys, the biggest part about it is you'll start noticing the motivation is not the commission, it's your focus and your habits, right?
Okay, hold that. Man, that is not where I thought you were going to go. And I love that.
Were you going to say, yeah, let's do it, let's make money?
Yeah, no, this is why I love having these conversations. And for anybody that listens to this, Abdel and I don't prep. Like I just generally hit you 24 hours before. I'm like, yo, this is the topic, and that's it. And then we'll just figure out where we go. Look, I was thinking about this morning. I went back to commission. I keep going back to commission because years ago when we came up with this idea of model matching as a verb, before it was ever a software, before it was ever tech, it was, how do you match the core competencies of an opportunity with a company? By the way, that could also exist between the originator and the agent as well, is how do you do a almost like a full doc audit between people to ensure that we're in alignment across core competencies? Well, one of those core competencies is culture. We hear about culture all the time. It's a bit of a loaded word. A lot of people don't even know what it means, but you can touch it. You can feel it. Like there's emotion to that. But we put compensation under culture. And if you ask me why, it was because compensation is connected to motivation, which is then connected to culture, which is process and all those things. So as I think about a commission person, commission, in my opinion, creates a salesperson, but we call our salespeople advisors.
Yeah.
And that's not what always shows up, especially not only to the customer or the referral partner, but internally to the ops people, because now it's about speed. Now it's about pipeline management. And when you're commissioned, you're generally going to be a little bit more emotional, for good reason, about the little things that can go wrong. And when they do go wrong and you're sensitive to it, what does that do? That degrades trust. When you degrade trust, then what does that do? That makes you less of an advisor and more of a salesperson. I love what you just did, which was you didn't make it about the company. You didn't make it about the process or the ops people. And I think that's because you're assuming, let's just assume we're in a situation where it is a good company, there is good process, and there are good ops people. You're making it about you. You're bringing it back to you, which I find that really, really interesting. But how do you then align that? Well, I guess if you're doing that, then without thinking about it, it's then good for the business model. It lines up with the business, the ops, the process, the loan flow, the pipeline management.
It falls on the originator, right? It falls on the originator to find the right leadership team. I said, well, I can't find from a branch perspective, I can't find the right leadership team. So I'm going to go very quickly and create my own, as you're aware, right? I can't really speak from a company perspective or ops perspective. It's the only damn company I've been with, PRMG. I eat, sleep, breathe it, right? But to that point too, I'm also extremely vocal. So if I see something that is not aligning with the vision of where I want to be, not for me, right? We're past the part of how much money can I make. My brother, I'm good. I live a conservative lifestyle. I just drive a freaking Cybertruck because it's cool and I get a lot of business and I can write it off.
That's right.
But I think the key of it comes down to just your follow-up has to be super tight. Your communication has to be on point. We constantly have to get educated, right? Like non-QM, I was at the Mortgage Bankers Association, like, New Jersey, right, for Monday, Tuesday. And dude, I'm a kid in a candy store and I know all this stuff, but I'm recording every session on my phone. I'm dropping it into our AI note taker. I'm passing it to my team that are now creating, AI generated slides and PowerPoint. And guess what? I got content for days, right? And I'm not the one speaking, right? I started learning and hearing, all right, the new appraisal process is going to change in November. I knew of it, but I didn't realize, oh shit, November's right around the corner. This is a huge topic point now. When I train my agents next week, all I'm going to talk about is the new appraisal process. And did you guys know that is happening? And do you want to make sure that you're educated on the new appraisal process? So when you're meeting with an appraiser, you're noticing why they're taking a little bit longer at the property. So Mr. and Mrs. Realtor, don't expect an appraisal to be done in 15 minutes. It might take 45 now, but we're going to get the report faster because the appraiser is essentially conducting what he or she would have done at home there. No one's talking about that. Right? They're usually just like, oh my God, rates are taking a dump. Okay, so what? Right? Mr. Klein, I apologize. I had roughly estimated that the market was going to, change. It has not. Conversations are happening throughout. The impact and the trust factor, I think, totally trumps the commission. And before you start counting your commission, and really put those systems in place, the income and opportunity just comes very quickly thereafter.
So what about this? Because your use case, in my opinion, is an outlier because you're an outlier. So we got to put our heads in the places of 80% of this industry, which is scratching and clawing to just get the next loan. They're just scratching and clawing to get the next loan closed. It's not an easy business. Like, I get that. But it can be really, really fruitful. You could be average and still make a lot more money than your average neighbors. So what about this? I know that there are companies that measure pull through, EPO, borrower satisfaction, all the things that are not just volume. And then there are some companies that will bonus the originator based upon those KPIs. I kind of see that less and less, honestly. I think I used to see that. Yeah, I used to see that back in the day a little bit more. Maybe if you're with a bank, that's a little bit, that's going to be in place, but then the commission structure is totally different. Do you think measuring those things and then tying something to compensation would be helpful in that connection between the corporate motivation and the commission advisor?
Yeah. I mean, listen, again, I'm going to consistently go back to the branch manager because that's my role in the area manager with our branches, right? The corporate structure is to give me as much resources and tools and up-to-date stuff that is out there, right? In my professional opinion, I don't need the corporate structure to tell me how to run my business. Now, I'm also the one who tracks everything. So we track down to client, content, credit, conversion, and closings in that order. Monthly, quarterly, right? Client, where are your clients coming from and how many clients are you getting, right? Content, what are you putting out there? And content cannot just translate to just online. Content as in what are you putting out there to book networking events, as you know, we're doing a lot of. What are you doing out there to do webinars and all that fun stuff? Obviously, credit, how many credit pulls are you pulling? And are you pulling too many credit pulls that you're not converting on those credit pulls? Well, then you have a bad source, my friend. Then we got to go backwards and figure that out. Obviously, conversion to that point, right, is where your lead's coming from. Are they converting? Is a realtor just throwing you we just had a mobile home die that I told the originator from the get-go, don't do it. Like we're not the mobile home driven lender, right? Let them go to company ABC that might be able to assist. And then the last one obviously is closings. What's your pull-through rate, what's actually going through, what's falling and stuff like that. But Eric, I would say the biggest focus, if you're an originator out there, and it's a very tough pill to swallow because it's always like, right, you wake up and you're like, I'm only going to have 1 or 2 closings for the month, and my expenses are X. If you focus on your client experience and your partner experience, right, What does that mean? New partner comes in. Is there a checklist? Is there an SOP for yourself or for your team to engage the exact same follow through for both consumers and for your partners? And if it's so regimented and it's so structured that there can't be, oh, I forgot to talk to them about a mortgage coach total cost analysis, or I forgot to talk to them about what it would look like for cost of waiting with MBS highways comparison. But for me, it's so freaking structured that even if I may have necessarily missed it on a pitch when I'm talking to a consumer, actually that's a very bad word, on a conversation with a consumer, I know that my new stuff that we started doing, right, with Housing Link, it's all there, right? Like I can't even miss it because it's structured, it's there. So when I call the consumer back to do our second follow-up hopes and dreams call, yo, bro, congratulations, you got pre-approved $500,000. My team just sent you over the pre-approval. Can we walk through it? Here's your pre-approval. Here's your total cost analysis. Here's your cost of waiting. Here's your real estate report card. And then they might say, oh, there's not many restaurants like we're writing in the real estate report card. Yeah, is that big for you? Yeah, all right, well, maybe we need to spread our reach a little bit, and we'll let the real estate agent know. So in that way, we have those upfront combos, right? There was never a conversation about rates. There was never a conversation about, all right, let me push them for branch managers. Let me push them FHA because the margin's better than my conventional, right? No, dude, it's, I want to give that client that cliche white glove service where I don't even know what I'm making on a deal. I don't even look at the loan amount. And sometimes I don't even want to look at the house that they're buying too, because then I'm like, wait, you're paying how much for a 3-bedroom? That's a different conversation. But it's client experience, man. If you focus on that client experience, partner experience, you leverage the tools that you have in place to find the right partners that are going to align with your vision, right? We're extremely modern day forward driven. So if I respectfully work with a professional who may not necessarily want to be coachable in that realm, I'm not going to align with them. I'll do business with you, but I know for a fact that it's going to be more of, hey, they're never going to say what's happening on a transaction because we beat them to the punch, right? Monday, Wednesday, Friday. But it's going to be extremely transactional rather than relationship based. Hey, I noticed you started talking to the client about the difference between non-warrantable and warrantable condos. I noticed now, right, Freddie came out with the new condo changes, the condo guidelines, right, where condos need to no longer have, they can't have 10% reserve, now they need to have 15% reserve. They also got rid of limited condo review now. So now it's always going to be a full condo review. They got rid of the restriction of owner-occupied percentages, right, where that's no longer going to be a factor. You got to stay up to date to that. So when I talk to a consumer who, and I say this with total respect, if I talk to a client who might be blue collar, he didn't give a shit about this. He's like, listen, dude, I just want to know my monthly payment, my cash to closing can qualify. I'm still going to give him the same client experience, but the gauge of my conversation and maybe necessarily not as much as that. Versus if I'm talking to another consumer who might be a little bit more analytical, who might be a little bit more gauged towards that, I'm going to entertain that. Our responsibility as originators is to always stay top with what's happening, have those convos with those clients. Those clients are now going to cross-check what I just said, and they're going to find out that Freddie Mac's new letter just came out, and we're educating them on that stuff. And now, guess what? The commission is already, in my opinion, guaranteed. Right?
Yeah, it's like you're not really thinking about the outcome. You start with process first. It's maybe a way to sort of bookend this and close it out. First off, like I would highly recommend someone, like if you're listening, take the audio of this, throw it into AI, tell it to build you a playbook, and just have it summarize what Abdel's always talking about, because this is the difference between chasing a loan to close and building a business. And as an originator, you have that opportunity to build a business that's both scalable and transferable. Gosh forbid something happens with your company. That portfolio of past customers and knowledge has tremendous equity value, the same way that the home that you're helping them buy is going to have equity value as well. So here's how I'll maybe close it out. Sounds to me like what you're saying in a nutshell is you can scale sales. You can do that. But if you're solely focused on the reward of closing, you might actually be scaling almost a conflict of interest. And that conflict creates friction, and that friction keeps you from scale.
Yeah.
All the other pieces either fall in line or you need to consider another business model. So No, this is great, dude. I'm telling you, there should just be everybody needs to take the audio, throw it into your favorite AI platform, and let Coach Abdel show you the way. All right, brother. As usual, this was great. You're the best.
Thanks, man. Appreciate you.